Hello, traders. Trader Geek Sam here with your weekly option trade review for Sunday, January 18th, 2026. Hope you're enjoying a nice long weekend, and we're going to take a look at the trades we have. We have about 14 open at the moment. Starting with Apple, which is not exactly knocking the lights out. I mean, these little rallies didn't amount to much, and we're rolling over again. You can see MACD is pretty solidly negative, but we have earnings not this week, but the coming week. So we need to see this get into shape. We've taken a couple profit targets on here at about a 55% level, but we're now back to our average cost, which is $1.91. And I think on Tuesday, if this thing doesn't show at least a little bit of strength, I'm just going to let this one go right here around break even. I have no patience to stick around for this one to recover, and we can always put back something on. But 5 days and it's just really no oomph in there. So there's somebody that's selling or offloading some Apple at this point. So we're at 255 from a high of 288. And since December 3rd, this has been a month and a half of selling, although there haven't been real high volume days since then. CoreWeave, this one was a conditional trade that ended up triggering. And so far, we've taken two profit targets at 2x and 2.5x, which is really nice. And like I said in my initial trade, if this one takes out the prior high over here, this one's going up. And sure enough, we are above the $100 level. And I'll bet you there's not many people that thought this stock was coming back from this kind of thing, but hopefully you're participating in this one and have a little bit of that, and we'll play it until it goes. I don't know when earnings are. Let's see if, yeah, no indication about earnings yet. Let's see here. Next one is Hog, doing a whole lot of nothing and not liking the fact that it's already rolling over. Here's the slow at 2038. So we have a 50% stop on here. We have until February, but geez, this thing could just not muster any strength. I figured it would get up to the 50% level, but I think if we take out this low, I might just cut this short, even if we don't get the 50% of our premium. We never really got more than 10% profitable on these. So Hog is living up to its namesake. HRL, looking better, although we're still underwater on these. We have a bullish combo. We bought a 25 call and sold the 23 puts. And we're still on 71%, but it's better than the 200% that we were down. So hopefully we continue to have strength in the staples and this one starts recovering. But this one has just about a year to go on it. So it's a long-term bullish play. I'm still very positive on it. And I have a boatload of these. So hope you're participating. If you're not in it, you can get in at this point. Morgan Stanley had a really nice reaction to the earnings and one that really held. And so I thought we'd put in a little short-term bull put spread on Friday. We're already down 20% on it, but no big deal. 185, 170 put spread. Very short dated. So we've got, by the time we get back to our desks on Tuesday, basically 10 days to go on it. I usually don't do very short term, but I like what the volatility structure was showing on this one. So Morgan Stanley, one of our financials. Netflix is another one that can't seem to get off the mat, and it has earnings Tuesday after the close. So we'll very likely be closing this on Tuesday before uh, the close. We'll see if we get any short covering into the earnings date. If we don't, that'll be telling enough. But essentially, although this is an April spread and I expect this to do well, we're not going to carry this into earnings. There's just too much risk. And even though it has a lot of time, we'll take our lumps, and whether it's a 20% loss, a 25% loss, we'll get out of it before earnings, since I don't want to plays, especially since we have no cushion whatsoever. And who knows what they'll say about the acquisition of Warner Brothers and their battle with Paramount for the acquisition. NVIDIA, um, still going sideways. I mean, you can come all the way back here and see that this has gone nowhere. So put selling has been the right answer here. We're up a mere 4.63%, but this was, again, a relatively new roll that we've had, and we've done a whole bunch of them. But we're going sideways. It's just what you want. Fortunately, we're not wasting money or time on premium. I mean, here's the only little uptrend it had, but that fizzled out, and now it's going sideways again. So unless we get a really drastic move in NVIDIA to the downside, warranting a call purchase, I'm just as happy selling puts and making money the slow way. Palantir, I almost did not replace this one immediately, and darn if I should have followed my instincts, but here we are, another roll of Palantir. We have about 9 or 10 of these in a series, maybe more. I can't keep track of them all in my head, but unfortunately, Friday's decline, which lost about $6 or 3.5%, put this one underwater, and underwater by 100%. We are still right at the short put strike. I am not worried about this at all, and don't plan to make any adjustments unless this thing closes at a new low, and that means something below 164, 165 level before I'll do something with it. And it very likely will roll it out just to keep this alive, but keep it from getting too far into the money. If you are nervous about this one, then you probably have too much size, or you're just this is not for you. But I have every confidence that Palantir is a strong stock and will recover. And regardless of the gibberish about AI being done and overpriced and blah blah blah, Palantir will truck on, and I would be buying the bigger dips in this one. Rocket Labs, boy. The good news is we have a trade on this one. The bad news is we're way above our short strike, and I should be repositioning. But like I said, I'd rather be repositioning into some weakness than strength. Maybe that's wrong, but in any case, we took our third profit target last week, and we are looking for more. And I am going to reposition us in this just as soon as I get the chance and I see a good time to do so. MACD solid positive. This is overbought. We could have a snapback anytime, but with us being fully in the money, that's $25 into the money. We're not going to lose that much value, but at the same time, this is a $30 widespread, and we're at 2/3 of the value with a year to go. So it's not going to expand that much more, even if it does get to 110, 120, which I think it could easily get up there. SPY, we have 2 hedges on. One of them is our inflection point spread, and we took profits on that at 95 cents. We bought it for 40 cents, and that was just kind of a token thing. We have until February 6th on these. We are down 35% currently, but big deal. If the market does want to pull back and correct, then this will be a nice hedge for us. Our second hedge is a longer term hedge into March, And, I expect some weakness given the volatility structure. I expect to see some weakness come February, March, after some maybe even more all-time highs. But we're down 55% right now. For those benefit of those who want to have a stop in here, I'm personally not putting a stop on this. I'm not going to take max loss, but I want to see some weakness that and see what the degree of weakness is. And I'm not going to 100% loss. I'm going to just give this room and time. And since we have until March, I don't in no rush. So you have to do what works for your P&L and your style of trading and your risk management process. TLT, I came really close on Thursday to rolling these out again. I guess I should have, excuse me, but we're at 38 cents. We sold them for 86 cents. So we're still up on these, but they still have until February expiration. And I think they were worth more than I think they were down 28 cents, so which was still more than I wanted to pay to buy them back. I wanted to try to get them under a quarter, but anyway, we'll watch this one. This is one we've done more than a dozen rolls, and it's worked out great. And with a range bound TLT, we'll take it. XLP, finally rolling. Look at this run, guys. This is great. I hope you're participating. We are up 28% on these after a long, long struggle. And I'm not going to take profits at 25%. I have my first profit target set at a double, and that's what I want out of this. And sure, could this pull back? Yeah, we're outside. Well, we closed Thursday outside of the Bollinger Band and back inside of it on Friday. So this looks good, and I don't think it's too late to add to this, and I have added to this. So this is one of my larger positions, and I like it. XLP up 27% after doing nothing for months. Finally, we have XOM, and XOM is been very good to us. We caught it at the right time. We're at the 120, 130 call spread. The only downside is now we are at the edge of the short strike. So we've taken 3 profit targets. And if this gets anywhere near $9, we'll just close it out since we have a lot of time. And we do have earnings coming up, I think on February 2nd. So we have some time before earnings. And with the energy trade looking like it's better than 2025, why not? So let's see what we have. 1, 2, 3, 4, 5, 6. So we have 8 out of 14 trades that are profitable and not bad considering that 2 of them are hedges and the rest of them are longs. I'll take it. And as long as our percent winners are better than our percent losers, that's the way to grow an account here. And I looked on Friday at a couple of things I wanted to do, options on gold or options on GDX, but I just didn't like the size of the candle of GLD coming down on Friday to do something, and GDX never got to my price that I wanted to put on a call buy. And in fact, it ended up closing positive after getting down to 94. So 94.44. I was looking for somewhere around 94 to maybe put on a trade, but we'll get our chance. And I'm disappointed that we didn't take more advantage of this metals and mining run, but it's my plan to kind of remedy it. And if what everybody's saying about gold going to 5,000 is true, then there's still gas in the tank, although it is a fairly obvious trade at this point. So it will be on somewhat of a tight leash, given that it could stand to correct a little bit. In any case, these are all your option trades. I will be back in the room with you on Tuesday. Any questions? Trader Geek Sam, and that is Sam at optionmarketmentor.com, or on Twitter. Please give me a follow at Trader Geek. Enjoy your Sunday and Monday off, and thanks for watching. Talk to you later. Bye bye.